Last month, I only had 2 red days and hold over a 70% win rate, all documented live on YouTube. What has allowed me to do this is the concepts that I'm going to teach in the video, which is liquidity and price action. These two concepts has helped me to achieve this because liquidity is very misunderstood. I spent a lot of my time wasting hundreds of hours trying to look for liquidity grabs, try to trade like the banks, understand pools of liquidity, but you simply can't. You are retail, you can only understand price action. So how are we going to understand price action in order to understand liquidity, and how has it helped me? And I'm going to share my experiences and put these two concepts that maybe can help you. So if that's interesting, let's get to it. Alright, so before we get into some case studies here based on real trades and also view live trades that I have taken, as I said, I want to use this using live examples, not some BS. I want to explain to you about liquidity and actually draw some diagrams and make sure you have a clear understanding. So what do we mean by liquidity and price action? So we need to understand a few key parts of this. We need to understand, okay, what is liquidity and what is price action? So let's talk about the easy part, which is price action. Price action literally refers to price moving on the charts, right? And normally price action forms in 3 different ways. We either have a ranging, we have an uptrend, or we have a downtrend. That's it. That's how price action will form. I like to think of the market in ranges. So we have support and resistances. Price moves between these supports and resistances, maybe spending some time, moves from this one to the next one, and this is what's called ranges. So we move through ranges, okay? Now, all of these lows and highs is obviously liquidity, right? Because there had to be big order flow in order for price to change direction, sell orders, buy orders, and times of consolidation is doing what? Generating liquidity, because we're accumulating, right? That whole accumulation and distribution comes from accumulating, means accumulating what? What are we doing? We're accumulating orders more than likely, because whenever we have a range, eventually we should have a resolution, and that resolution should be the resolution of the orders that were created. Now, a big misconception about liquidity that I see a lot of retailers, they try to focus on, first of all, they either use liquidity to target, right? That is a strategy in itself. Or they're saying, I need there to be a retail liquidity grab in order to enter. You are retail. You need to start to forget about this stuff. People looking for liquidity sweeps and stuff like this, thinking they need to stop out all the stop losses. That's not necessarily true. It does not always have to form like this. Now, you can even get double liquidity grabs like this. That's why I don't try to trade with this area here, where you're trying to guess a little bit and trying to predict that retail is getting stopped out. No, I just follow the big guys, right? I follow the price action and allow them to generate liquidity. So instead of being the guy who is the liquidity, you could say, I'm the one who just allows the charts to generate liquidity. That's what I'm going to explain. How is liquidity generated? And I follow along with price, okay? So before we jump into the examples I have ready for you, which are based on live trades I took, which will explain liquidity and price action in 2 different ways, I do want to explain how liquidity is generated. So definitely those wick outs, those when you have a range, right? So you have a resistance. So what we're going to do, we're going to draw a resistance. We're going to make that both in orange. You have a resistance and you have a, let's say, a support. And that means price has in between this zone formed some sort of price action, okay? And the price action can look like this. We've gone bullish from here. We've gone bullish. Maybe we do this and then we leave this type of rejection maybe from up here like this big rejection wick. We flip down. I'm going to finish drawing this and then explain to you. So this is a clean example of, let's say, a scenario we'd have in the market. How is liquidity generated? Now, in terms of your traditional ways and the ways I would get confused when I start is that I'd be concentrating on this point and I'd be concentrating on this point. These 2 points would be the points where I'm concentrating, being like, oh, this is a liquidity grab, stopping out retail traders to continue in the other direction, okay? And what happened was I would get reversals like this that would maybe stop me out, or this would come back up and continue directly from there. But in this example, I wanted to show you both ways, okay? So although this is in hindsight a good buy, there's a lot of confusion because this also could have been a good sell. So you focus on liquidity grabs being, sweep of highs, sweep of lows, which is wrong. You need to simplify it because you're just going down a rabbit hole that's confusing. I stay out. Price going up from here, grabbing liquidity, which we see with price creating a wick and rejecting. Price going down here, grabbing liquidity, we see the wick rejecting, plus having this range. You see this range? What is a range? Price that makes a resistance as a support. All of that is market creating liquidity for me to trade according to my plan. Because what do I need? I need liquidity plus price action. So I need, if today I'm looking for buys, I don't care about price grabbing liquidity from the highs. It doesn't bother me. I let the market do those random things and I focus on things that I'm in control of, which is my plan. Okay, so today I'm only looking for buys. I wait for a zone that is clean. I look for price to create structure. If it can create these wicks here, it's just generating more liquidity for my trade, giving me more confirmation. And once we get out of this mess, then I become a participant of the market, okay? And that's how I use liquidity and price action. Now, it might seem a little confusing, but that's why we're gonna go into 3 examples now, all live trades that I've taken, which you can watch the recording on YouTube as well. We will go through a live trade together as well, just to show you all of this in action, okay? As well as how liquidity can be picked from different ranges. So one rule of thumb here is that, and I like to put it this way, this is a cool way to put it. In order for price to go up, it must come down first. In order for price to go down, it must come up. And that's the simple thing. Like, let's say we want price to continue bullish. We needed price to go down. That's your liquidity to continue up, okay? So I want to first talk about this example here. This is a trade I took as well. Both of these trades I took on gold here. I mostly trade gold, GJ, and DAX as well. This scenario here, we can see what's happened. So we created that range. Here's a resistance. Here's a support. We can see here is a nice area for me to trade in because it's nice and clean. Okay. I don't care. That's the exact example I drew, right? I don't care that price created liquidity. You have all people trying to take shorts in here now, getting messed up in the range. Price then took liquidity from the bottom of the range. Same example I drew you, right? So all it's doing is creating orders, creating structure, and that structure is my liquidity that when I get my confirmation of a 15-minute candle closing above, I leave this mess. This structure has created liquidity. The rejection wick here is a plus because it's showing me like a rubber band. Price is going down to the bottom of the range, grabbing orders to give me a spring back up, okay? It's giving me that to do what? To go and take it, right? And that's my confirmation. So let me show you in another trade here how that structure will work. Price went down, grabbed orders. Now I could have entered here, but there was some technical reasons that I'm not going to get into this video about. Make sure you show up to the live streams, subscribe to this channel for more videos where I do get into these. Check out my previous video as well. I did talk about entries more in depth, but I decided to enter on this one, understanding that we left this structural point, which is my liquidity generation, generating me liquidity. This is all-time highs, but what happened? I needed to have structure here. And what happened was in this trade, I got stuck. Why did I get stuck? Price just started ranging, right? Started ranging, but since there was structure there, it protected my trade the whole time. Protected my trade the whole time until boom, we eventually left, right? And that's what I mean. All that's doing is popping up and down, right? Is just creating liquidity. So where is my stop loss hunt? People are like, oh, you got lucky. But I can repeat this over time because I'm putting a logical stop loss placement based on when the candle was to close, okay? So what's very important? What are we learning? Range creates liquidity, right? You don't need to worry about stop hunts. They're not important in my experience, okay? So this trade ended up playing out. I would like to show you a very recent trade here as well. This is on DAX. Plan for DAX today was bearish bias. Okay, what does that mean? That means today I'm only looking for sells. I recommend you watch my free course so you can understand how to identify bias. Because if you're not identifying bias and trying to trade with price action and liquidity, you're going to be in big trouble because you won't know what direction to look for. You'll be like, oh, this is the liquidity grab to go up, and then price goes down and you think, oh, it's all doesn't work. I don't know what to do. Okay, so what's very important, is to understand what direction. Today on DAX, there was bearish bias, meaning I'm only looking for sells. We were down here when the session started, okay? I can show you the session start on DAX should be, there we go, here's DAX, there we go. See, session started, we were down here. So you can see we were down here on DAX where the session started. And what we ended up doing is we ended up coming where? To more the top of the range here, okay? See if we can get like a 15-minute view. There we go. All right, so what did we do? This was a 4-hour resistance, okay? This was a 4-hour resistance. And what we ended up doing is we went and retested the 4-hour resistance. So remember that rule, it went up before going down. So this is grabbing liquidity from the 4-hour resistance to potentially give me a move back down. So what am I checking for here? Well, I'm looking for my candle closures to leave the range to give me confirmation. And I'm looking for what? I'm looking for that structure. So my plan here was to do what? Take a sell breaking this low and target the lows of the range, okay? Just target the next support resistance. I don't personally target liquidity. It's not something I like to target structure, support and resistance, which I explained in a lot of videos. So that was my plan. You can see we went retested, we created structure. I take the trade here and boom, I get entered. Now the setup, I'm not talking about what type of setup this is, how I place stop loss. That is in other videos, and as well I teach more, of course, you know, when I'm trading with the guys and we have our webinars, and those are all recorded and kept there for people to learn and of course ask me questions direct. So setups, I just want to talk about the concept of price action connected to liquidity here and how that works. So we can see here, beautiful, broke the low, immediately put me in profit. Long story short, we just pushed down nicely, boom, TP was hit, clean and beautiful trade here, and actually ran down towards the lows, as you can see, and boom, held a little bit, and that was the trade there. So W's in chat, let's get it. And yeah, so you can see how that works. Nothing too complex. I don't actually need to make this video much longer. I can keep it short and sweet using clean live examples to show you it in action. And that's it. So if you enjoyed this video and if it made sense and to give you an idea about how to use price action with liquidity, let me know in the comments if it was useful. Leave a subscribe on this channel. Hope to see you guys around. Join the family, join the team. Let's get this together. Take care, trade sharp, and hopefully catch you guys very, very soon.